This is our Forex blog for February 13th, 2012. And like most days, we want to buy the strong currencies versus the weak. We want to sell the weakest versus the strong. We have a histogram on the top for the dollar. We statistically compare the dollar to all the rest of the currencies on multiple time frames. The real-time strength is made up of 5 different tools we average together. 3 of them measure the percentage of dollar pairs going up or down with different algorithms. 2 of them measure the intensity of that trend. And so anything that averages together at and above the 80 level and is red is extremely weak, and green is extremely strong. Underneath that we have the daily, weekly, and monthly trend. So primarily I focus on the real time, that's the most important, then the daily trend, then the weekly. If all 3 of those line up, you really have good odds of catching a big 20 to 50 or sometimes 80 or 100 pip move, or multiple series of moves that will ultimately go up 100 pips. If the monthly trend is up, I tend to trade a little bit more lot size. If the real time and the daily trend's up and the weekly, monthly trend's down, I'll maybe trade a little bit fewer lots because the odds are less. You want to sell the dollar coming up to today against whatever currencies are strongest. So let's scroll back and take a look. We have the Australian, which was very strong over the last few weeks. Late last week it got weak, as did the New Zealand. The New Zealand's clearly the strongest of the two. So you could buy the New Zealand against the dollar on Sunday night and the yen, but the dollar is much weaker. So we're looking to buy the New Zealand dollar Sunday night. And notice, like I said before, from around 8,300 went all the way up to 8,370. This is a Fibonacci profit target level that I spent about 30 to 40 minutes each night doing for you, so you don't have to do it yourself. I've tried over the years to teach people kind of the art of drawing Fibonacci's correctly, and some people get it and some don't. But if you don't get it, it doesn't matter, because you can have these automatically show up on your chart. The bigger the moves, the more likely the Fibonacci profit targets are to work. You can also draw the fib levels intraday, but these levels are much more significant, and especially when the price is above the upper 2.0 white containment band, that is an area where price typically reverses. You can see it came up to that area. If the Fibonacci profit target level is above here, it's much more likely to reverse. And you can see it did. It pulled back about 30 pips over many hours. But nonetheless, getting back to this, this is one that was a very high odds trade. You have this nice little pullback right here. Notice how our intelligent trailing stop keeps you in here. It pulls back again, you get in, and the trailing stop got you out pretty much almost every pip in this instance, which it rarely does. But out at 70, maybe in here at 36. You made about 30 pips on that last trade there. Now the yen, mixed results, wasn't quite as weak as the dollar, but because the daily, weekly, and monthly trend was down, you certainly could look for New Zealand yen buys last night, and you can see this one went up, 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 and again, notice how my Fibonacci profit target, the second fib target, was the high of the day, and then it pulled back about 65, 70 pips. And the beautiful thing is you don't need to understand how to draw these fib targets correctly in order to benefit from it with your trading. So once the day started, let's scroll forward a little bit. You can see a lot of weakness here, and then about an hour of strength. Typically after a period of weakness that can sometimes run for 3 or 4 hours, you're going to usually have a half an hour to an hour and a half to 2 hours of strength, and then the weakness will come back. And you don't know if the weakness will come back for only half an hour like here, or in this instance right here, it was pretty much weak for many hours. That's the downside. We can't predict the future. All we can show you is how intense trends were in real time and in the past, and use that to trade in the direction of the majority of the trends. Yeah, everyone knows to trade with the trend, but what trend? The 5-minute trend could be up, but the hourly trend could be down, the half-day trend could be up, the daily trend could be down, the weekly trend could be up, and the monthly trend can be down. You can have mixed trends. It happens. And so that's something a new trader should focus on. What kind of time frame are you looking at? If you're a scalper, then just focus on the real-time trends. If you're a little bit longer term, you want to, it's kind of how I trade. You want to get into trading and hold it for 30 minutes to 2 or 3 hours and hopefully catch a 30 to 50 pip move. You're going to want to watch the real-time momentum and try to focus on the daily and weekly trend being in that direction. You're going to find those bigger moves much more often when you do that. As far as scalpers, they're looking for 5 to 20 pips. The real-time momentum. If you have a lot of weakness, followed by very little strength. That weakness is very likely to continue, as you can see. Same pattern here. And now there's a little bit more strength than we've had over the last couple hours. So you can see that the weakness didn't come back up in intensity. But here, a little bit of weakness, only one bar of strength, mild strength, a little bit above mild strength. Then we had another period of weakness and not extreme strength, so the weakness came back. And then you have strength followed by less weakness. And guess what? That momentum continues to the upside. And that's how you read this. It's pretty simple. Right here, you have a lot of strength in the yen. Unfortunately, the daily, weekly, monthly trend's down. You don't know for a fact that this is going to continue. But during the counter trend phase of about 15 minutes here, there's about half weakness compared to the upwards momentum. This is a kind of momentum move that's likely to continue, and it does. So at 7:30 right here, you could be trading and looking for one that's weak. Now, the New Zealand was strong all day, but it had some weakness, and coming up to 7:30, you can see that exact opposite pattern right here. The New Zealand yen is likely to go down coming up to 7:30. So if you look at this chart here, here's 7:30 on the chart. We had this little bit of a pullback, right? And it's still really above our 1.5 containment band. I prefer to do counter trend trades above the 2.0 white one here, but it's very close to that. And it's likely to have a two-wave pullback before the trend continues back up. And this is your profit target right here. You can go short right around 85 here with your stop. Maybe put it a few pips above 90. 4 or 5 pips is too much. But you can literally risk 8 or 9 pips right here. And here's your profit target. And a lot of times on pullbacks, it will hit the hourly right here at 65. So you have 20 pip profit, 10 pip risk, or you can also scalp this, get in, out, short again here, and out. And these are our trading zones also, part of the fib areas. These are automatic support resistance areas. When price goes up, we yank this up. Notice as price goes up, this starts showing up here, but it wasn't there earlier in the day. And when the price comes down and hits it, you get this nice little bounce of up to 30 pips. Because all the time frame trends are up, and this one pulled back, it pulled back, and it made another wave down. You can see off this first wave right here, it went right to the 1.618 fib, which is a very high probability reversal. It was extremely strong earlier. That trend's likely to continue. Most of the time, it will work its way back up to the 50% retracement, which is right here. This would have been your profit target here at 77, in somewhere down here, for a 23 pip move with very little risk on that particular. When I say very little risk, I mean your stop. If the trade doesn't work, you're going to lose much fewer pips than you're likely to make if it does work. That's what I mean by that.